Let's have a look at the market snapshot for today. The Indian markets have been doing really well. This was sixth straight session wherein the advances were higher than the declines. Uh, there was little sort of panic in the market, at least that is what most feel on all the social media platforms. But I think the numbers, the data, the chart patterns, everything remains intact. There is no way that any market will just keep rising. Six straight sessions is a lot of. Here and there something will keep happening. There are no signs of panic. At least that is what the data says. Coming back to the data, we got around 320, 310 of advances against 280, 270 declines. New highs, we touched 25 today. I think last 50 sessions plus, this is the first time the new highs have crossed a number of 15, but this is 25. Again, a very good news for the markets. Breadth, very strong breadth. I mean, just look at 20 EMA touching almost 400 stocks. Above 50 EMA, around 330, 340 stocks. Above 200 EMA, just sub 300. So very strong breadth. I think the numbers are very good for the Indian market. So no signs of panic here. If we look at the structure of the chart, very good. This is for Nifty 50. This is what this is what was expected actually, and I've been telling, I think this entire week I kept telling I would want this to hover somewhere here, because see, if it just keeps rising, then I mean, basically it is not forming any base, and a rise when there is base, that is what will be needed for us. So I think very good fallback, and the entire day it got recovered also. So I think good looking chart for Nifty 50. If we look at the trend, Nifty 50 looks bullish, trading above 50 EMA, participation mixed, breadth is strong. Nifty 500 looking bullish, trading above 50 EMA, participation mixed, breadth strong. Coming to the US markets, again it has become volatile. I mean, if you look at the advances decline, the way they are reacting, like yesterday we had around 90 advances against 410 declines, and today you look at the numbers, they have just evened out. So that is the reason I have been very cautious about the US markets. I'm in fact not making any new positions at the moment. Around 260 to 70 advances against 230 to 40 declines. New highs are 9 against 491 new lows. Breadth again decreasing from the top. Above 20 EMA just around 250 stocks. Above 50 EMA around 270 stocks. Above 200 EMA almost touching 300 stocks. So yeah, it has been a falling market, that's what I would say. Look at the chart. The chart looks very good for the Nasdaq 100. But again, I'll be cautious because numbers are not supporting, even though the chart looks very bullish. S&P 500, no differences. Chart looks amazing. The numbers don't remain in sync with what the chart looks. So I'll be conservative or defensive. Russell 2000, not a different story. Chart looks good, but the numbers are not supporting the rise. So I'll be cautious here too. Let's look at the overall trend. Nasdaq bullish for sure on chart front, trading above 50 EMA. The participation is, sorry, that should have been in the green. Participation is strong and the breadth is weak. For S&P 500, bullish trading above 50 EMA, participation mixed, breadth mixed. Russell 2000, bullish trading above 50 EMA, participation is strong, breadth mixed. See, if you would have watched my last 3-4 video sessions, the problem is this is changing in every session. See, a proper bull market will have it all green. A proper bear market will have it all red. But when it is mixing with all green, red, yellow, that means it has become volatile, it has become choppy, and that is the reason we should be cautious. So that's the only takeaway I would give for the US markets. I'll say be cautious. Let it break the highest point and we'll consider. If the data is supporting, we'll try to enter, because we are not here to predict the market. If it enters, we take a bet. If it doesn't, it just hovers, it just volatile, remains volatile. No point of taking new positions. Macro dashboard, This is my biggest indicator actually, and I have been like this is the reason, I'm not taking any bets in the US market. US yields are rising again, 4.4 dollar rising, uh, above 50 MA. VIX is good actually at 16. It will be considered very neutral, a good environment for every participant in the market. BTC is bearish, gold is bearish. So why I'm not like optimistic about the US market? See, the thing is, yields, dollar, equities. Now everything cannot be rising. We need to understand this broadly. If everything is rising, so basically it is euphoria in the market. And by the looks of it, does it looks like a euphoria kind of environment at the moment? I don't think so. So it's better we remain cautious. The second line indicators. See, when BTC turns bearish, what does it mean? It basically means investors in the markets, institutions in the markets are not, ready to take any kind of risky bets in the market. That's the simple take. Now, dollar yields are rising, BTC is defensive. That simply means institutions, banks, financial institutions, uh, HNI investors, they all are moving towards safer havens. And that is the reason, even equities have become volatile, and slowly, gradually, at least this indicates that they will become weak. Gold is also defensive. So what will be my scoreboard like? I like to play strong in the Indian markets. Uh, US markets on the data front looks mixed, but I'll definitely avoid it for the moment. Macro looks neutral. The takeaway from the markets, India looks a strong, breadth participation, everything improving, sustaining. Very, very good market to be in. US markets, at least from my point of view, I'll avoid dollar. If at all I want to invest, maybe I'll choose getting into yields in the US market because that is what is rising. Bitcoin, gold, indicating the risk appetite is subdued. VIX around 16, indicating no signs of panic. Overall, very, very good market for the Indian context. US, I would say, has become volatile, indicating everything to become bearish. But again, this is not a prediction. This is just based on charts and the data. I just don't like to believe where the market will go or what will happen. I'm kind of a person who would just like to follow the markets. So for the moment, I would avoid US markets and would be strong, trading strong in the Indian markets, specifically in the small and mid cap indices. Yeah, that's all for that's everything for today. Hope you all found this useful. Thank you so much and have a good one. See you next time.